Hey guys, welcome back to the channel. So today I'm going to talk to you about what the MACD is and how you can use it as an indicator when trading stocks. I will also show you how to set it up on the ThinkorSwim platform. So if you're new here, please consider subscribing and hit the like button as it really helps with the YouTube algorithm. Okay, so what is the MACD indicator? MACD stands for Moving Average Convergence Divergence, and it is an indicator that some traders use to help them spot potential trend reversals and also the general trend of a given stock. So let's just open the MACD indicator here on ThinkorSwim. First, just come up to here where it says Studies and click here. Then scroll down to where it says Edit Studies and click here. Now when the new window pops up, go to the left-hand side here and type in MACD. And then click here where it says MACD. Then we come across here to click Apply. Then we click OK. And the MACD indicator will open up at the bottom of the chart. So I'll just open this up here so you can actually see it. So the MACD is made up of three different sections, a histogram and two moving averages. And they are placed on and move across the zero line, which is this pink line that runs across the screen here. First of all, the two moving averages in the MACD are both EMAs, or exponential moving averages. Although the time settings of these EMAs can be changed, the general settings are 12, 26 and 9, as you can see here. And this is perfectly fine to use this setting. The first MACD line is calculated by subtracting the 26-day EMA of the price from the 12-day EMA of the price. And this line is the faster moving line of the two, and it is the light blue line that you can see here. The second line is the 9-day EMA, and this is called the MACD signal line, and this is the slower moving line of the two, and it is generally a smoother line than the first MACD line, as you can see here. And it is the moving average of the first MACD line. Next up, the MACD histogram will basically show you when there is a strong price move up in either direction by indicating increasing green or red lines. And this is also shown by a larger gap between the two lines, as you can see here. As the green lines increase, so does the gap between the two lines. And this is called a MACD divergence, as the two lines are moving away from each other. Green lines that are increasing in size would signal a bullish move and potential to be long in a stock, as you can see here. Red lines that are increasing in size would signal a bearish move and the potential to be short in a stock, as you can see here. When the red or green lines get smaller and the two lines get closer together, it is a signal that there is the potential for a trend reversal, whether that be bullish or bearish. And this is called a convergence, as the two lines are now moving closer to each other. And as you can see here on the chart, the stock went from a downtrend to an uptrend. And if the two EMA lines cross over the zero line, as you can see here, that will be confirmation of the trend reversal. So how do we use all this information to find signals to trade? First, let's start with the zero crossover line. So this pink line here that runs across the screen is called the zero line. And basically any moves of the MACD EMA lines above the zero line crossover from below would be considered bullish and a reversal of the stock. And this is where you'd want to be long in the stock or close any short positions. Any move of the MACD EMA lines from above the zero line and then below would be considered bearish and a reversal of the stock. And this is where you'd want to be short in the stock or close any long positions. Next, there is the signal line crossover or MACD crossovers. And this is where the first and faster MACD line crosses either above or below the slower MACD signal line. And you can see a few examples here where the MACD line crosses over the MACD signal line, and here where the MACD line crosses below the MACD signal line. So for instance, as you can see here on the indicator, this is called a bullish MACD crossover. So what has happened is that the faster moving MACD line has crossed over and above the slower moving MACD signal line. And this signals a bullish move on the chart and the potential for the price of the stock to increase, and it can be considered a long or buy signal. Next, we have a bearish MACD crossover, as you can see here on the indicator. And as you can see, it's pretty much the opposite of the bullish crossover. And you can see here the fast-moving MACD line crossing under and below the slower-moving MACD signal line. And this is a potential sign that the stock may start to decline and become a bearish sentiment. And it can be considered a short or sell signal. So looking at the chart, we have a bullish MACD crossover buy signal here, and we also have one here. And here we have a bearish MACD crossover signal, and we also have one over here on the right side. Next, let's look at MACD divergence. So the divergence is when the stock price and the MACD indicator show two different signals. And an example would be here. As you can see here on this chart, it is showing that the stock is making a higher high, which would be considered bullish. But when you look at the MACD indicator, it is showing a lower high for the same time period, which would be considered bearish. So now the indicator and the price chart are showing two different signals and are diverging. And in this instance, it would be a signal that there may be a reversal of the stock about to happen. And as you can see here, the stock actually did reverse and pull back slightly. So it can be a good indicator when used correctly. And here is another example on this stock, Tesla, which you can see the stock price is showing higher highs, which would be considered bullish. But when we come down to the MACD indicator, it is showing lower highs, which is bearish. So again, this is an example of the MACD divergence. And you can see here that the stock did actually follow the MACD signal and go lower. So that is just a basic example of how to use MACD as an indicator when trading stocks. I do recommend, if you've not used it before, to practice in a paper trading account or simulator so you can perfect your strategy before you start using real money. So if you found this video useful, I would really appreciate it if you could like the video and subscribe, as it really helps out my channel. And if you have any questions, please leave a comment below and I'll get back to you as soon as possible.